I see folks are continuing to come in, so we'll give people a second before we get started. As you're coming in, if you want, we're going to test out our chat here and make sure that our chat is working. So the thing I want to know for our new attendees and participants, during the close, what is your go-to close snack? That is my question to you. So as you're coming in, if you can help us out by testing our chat out, tell us during the close process, what is the thing your go-to snack? We'll give folks a few more seconds before we finally get started. Coffee makes a ton of sense, Amir. Sam, do you have a go-to close snack item when you're closing numerics
Such
books?
a such a good question. We have one of our designers, Eric St. Ange. He is a fiend for making sure that there's fresh fruit in the office. So
Mm,
typically I'm fixing myself apple peanut butter.
classic combination. I feel like you throw a cracker in the mix there as well, and kind
No
of you're
problem.
moving. You're moving. Yeah, it's a great BD1, right?
That's exactly right. That's exactly right.
Superb. All right. We'll give probably about 30 more seconds before we get things started. Make a latte. We've got a lot of coffee drinkers. I think caffeine is the snack of choice, it seems like. Yeah, tortilla chips is great. I remember, Sam, we were doing a podcast a few months back, and we were chatting with the CFO who said tortilla chips and yogurt was
Oh
uh was,
wow.
was
I
her
do
close.
remember that.
Yeah, it was her close snack of choice, which I found interesting. Tea would for sure work. Okay. Well, hey, we're at the 11:03 mark and we have a packed hour, so I want to go ahead and get into things. And as a quick introduction, I'm Nigel. I work on content here at Numeric. This is Sam, our head of finance. And of course, today we're going to be talking about the month-end close maturity model. So I'm going to go ahead and share my screen to bring these slides up, and then we will get into things. Alrighty. All right, Sam, can you see my screen?
I sure can.
Amazing. Well, again, folks, today we're going to be talking about the month-end close maturity model. This is something that at Numeric we've been workshopping over the last year, right? And teams have come to us asking in sales calls, our customers are asking this as well, which is what does the ideal close actually look like? How are teams structuring their task sequences and their workflows to really create best-in-class closes? And so, as far as our agenda today, Sam is going to walk through first what are some of the things he learned from his early career at Slack, being on the finance team there, working with a set of guys who have really gone on to become prolific figures kind of in the finance and accounting space. Then Sam will speak to the different stages of the maturity model, right? From there, we'll talk a little bit about data's role in the close. How do you structure your tech stack and your architecture, your systems architecture to really enable great close outcomes? And then at the end, we'll recap here and then hop into a little bit of Q&A. So first, again, get that chat going. We want to know, you tell us, what do you think actually makes a best-in-class close process? What are the qualities? What kind of rigor exists to drive great close outcomes? Some of you might say this is a certain number of days. Others might say it's having this process dialed in. But we want to hear from you guys. What do you think makes a best-in-class close process? All right. Lydia's saying knowing what to do, when, and who's responsible makes a ton of sense, right? General organization, I think, enables good close outcomes. Chris has added a note here throughout the month and not all at once. Sam, I think you're going to talk about that a bit, right? The element of kind of proactive closing. All right, we'll see if anyone else has anything to add, but I think these are two great responses, right? Knowing what to do, when, and who's responsible. So, kind of what we're getting at is not necessarily the close process being dependent upon, well, it happens in 3 days or it happens in 5 days. But in fact, some of these more like intangible elements of maturity, right? Does our close feel like it's scalable? Does our close feel like it's not all happening kind of in a high risk, high pressure moment? So with that, Sam, why don't we get into it? Oh, we went backwards there. And maybe you can provide a bit of an introduction to yourself, what you do at Numeric, and then we'll hop into your early days at Slack.
Yeah, absolutely. Thank you so much for the introduction, Nigel. And I'm so excited to be hopping on the phone with so many folks who are as obsessed with the finance and accounting space as we are, and I am. To give a bit of background on myself, I'm Sam Isaac. I run finance and operations at Numeric. And so much of my job is existing and tackling the product projects that do not neatly fall within building the product, selling the product, or talking to customers. And you might think that that encompasses finance and accounting, but a lot of other things. And it absolutely does. And the only way that I am able to do that while also still running a best in class finance and accounting system is to sort of inherit a lot of good sense, best practice, and technological know how from the folks who are building Numeric and from sort of the person who I inherited this close process from, Parker Gilbert, our CEO, to make sure that I am arming the business with timely and accurate financials that actually equips me with a set of data and business context to impact how we are, again, building the product, selling the product, and talking to customers. So I'm excited to get several clicks deeper into each of those topics. But first, a bit about my background. I am not an accountant by training. I have lived my life as a consumer of finance and accounting data, as opposed to a preparer of finance and accounting data. And given the number of career CPAs who are now on staff at Numeric, the joke that I like to say is that I'm probably like the 10th most qualified person to be closing our own books. But it's sort of a core part of how I'm able to contribute to the company, contribute back to product feedback, understand some of the pain that our customers and prospects are going through, on top of sort of the core internal requirements of closing the books and actioning against that information. At Slack, I was there sort of as Slack was operating as a public company just after its direct public listing. And I was responsible for the self-serve revenue forecast and sort of flowing that through into our P&L, our guidance to Wall Street, and to the leaders who were responsible for headcount planning or sprint planning. So I was downstream of a lot of the requirements of a healthy month-end close to help power some of the analysis and decision making that I did during my time at Slack. At Numeric, I am very much sort of the preparer of that information and have a lot more understanding of sort of what is required, what preconditions are required to do the job of actioning against the information on top of making sure that it is accurate. And the two lessons really boil down to two things. One, there is this sense of timeliness. And I think a lot of folks talk about the close in terms of days to close. How quickly can you get the books to a place where you feel comfortable calling the period done? But so often when I think about updating my expense model and flowing it through to the forecast and then working with business leaders, there is so much power that you can unlock, provided that you have the data that is not only accurate, but that is in your hand close enough to the beginning of the month where you can use the last period to actually inform decision making for the period that is in month. I think so often finance and accounting teams feel so sort of downstream and down the decision making ladder for how the businesses operate. But during my time at Slack, there were three leaders that really pressed the importance of how critical what we were doing for the rest of the business. So Brendan Zell, Slack's former chief accounting officer, he came in the early days to really mature the business, make sure that it was public company ready, took it public through a direct listing, helped the company get acquired by Salesforce, and then handle sort of that post integration period. He is now the chief accounting officer at Notion, and we're extremely proud to call him a customer. Alan Shim, who is the CFO of Slack and someone who I had the good fortune of reporting out the trajectory of the self-serve business over the course of my time there. And then Matt Heist, who ran FP&A and was very much sort of the executive who I think most embodied the sort of team mentality that sort of colored Slack as this best in class organization. And he really just did a couple of things extraordinarily well. The first is he did not compromise on the bar for quality. He very much understood that the quality of our data, the quality of our analysis, our willingness to sort of like go a click deeper, to have a segment off the shelf prepared, ready to sort of impact, EPD headcount planning or the way that we went to market for a particular go-to-market promotion for the self-serve business. He wanted to make sure that we were doing the diligence to earn the right to be at the table and influence decision making for the folks who, again, were selling the product and building the product. Beyond that, this group of people set a really ambitious goal. They joined Slack. They saw the trajectory of the business, and they understood that they needed to sort of get out ahead of the growth that they saw, which meant sort of leveling up the systems, operations, and level of talent, frankly, of the organization to make sure that it was ready to sort of go public. And they, again, I think that Alan had this quote that if going public is getting married, then operating as a public company is being in a marriage. And it is very important to have the preconditions right, so you are not sprinting towards a milestone where the plane is going to come apart as it's crossing the quote unquote finish line. Because in many ways, getting to the milestone is only the start of the journey. And then you need to sort of make sure that the discipline and the systems are there to continue executing. So all of this, I think, boils down to this idea that finance teams that are really operating at a high level need a long-term goal, and they need to sort of connect the essence of their work to this idea that it is absolutely essential to business success.
Sam, I'd love to interject and say here, or ask here, in fact, like you were at a company that was experiencing a lot of growth. We have a lot of people in our audience that are, high growth companies, high growth CFOs and controllers. I would love for you to maybe add a bit of color of like, what did the day-to-day feel like? What kind of did you take away from the culture of being in that sprint to what really is the kind of ambition and long-term goal that a lot of our audience is looking toward as well?
So much of the operating cadence of the business was built around these rituals. So the month end close is sort of the most obvious one. We need to make sure that the books are closed, the books are delivered to FP&A. We sort of prepare it into financial statements. But on top of that, there were weekly check-ins between the accounting team and the tax team, or the product team and my team, the sort of FP&A self-serve forecasting team. And it wasn't what I so appreciated about the environment is we were not always reacting to whatever the most pressing fire drill was, because we were meeting so consistently. We were really able to chunk out work, assign DRIs, work towards long-term solutions. And the way that we got there was not all at once or a light switch. The way that we got there was really building trust between those sort of core cross-functional partnerships, so that if we were going to make a change and localize in a new market and begin accepting a new currency, everybody was holding their hands and knew what their sort of leg of the race was in order to adapt the requirements of the finance and accounting org to the demands and sort of strategic prerogative of the business. And that was sort of born less out of, how you designed the organization on spreadsheets. And it felt a lot more like building these really healthy cross functional relationships.
Superb. I think that ties well into your advice here, right? About how teams must, operate knowing the essence and essentiality of their work. It seems that understanding how essential finance work is also about having those cross-functional relationships, right? Being able to map finance outcomes to the outcomes of other teams in the business.
That's exactly right. And I think that it is always sort of in service of the business, right? The finance and accounting team, I am extremely proud to say that I enable the business to sort of make choices in order to grow, in order to change, and in order to experiment. And it is up to me in the system that I design internally, and then I sort of reflect back as recommendations to how the product develop to make sure that the essential nature of our close process is not a destination, but rather a philosophy that because we sort of have an understanding of the component parts, of how data flows between systems, we are able to be adaptive and able to sort of operate a system that can keep up with the needs of a rapidly changing, rapidly growing business.
Now, people are probably saying, hey, okay, Slack was great. That's cool to know all this, but they want to know how they can make their own closes better, right? And so we want to get into really what makes an ideal close. How do we at Numeric think about building ideal close processes? And kind of in our conversation, Sam, you've talked about, a number of principles, right, that teams should really take into mind when they're thinking about the close.
Yeah, I think that number one, again, is you need people bought in and they need to feel the impact that their work has on the ability for the business to function well. There's obviously the sort of reporting obligation and the audit obligation of closing your books in a timely and accurate manner. But that is real data that the team should feel sort of empowered to use and impact decision making across the core go to market and EPD teams. The foundation, the bread and butter, is an accurate and complete data structure of all of the transactions within your business. That is not only sort of the completeness and accuracy check of those individual transactions. It is also understanding what dimensionality is necessary for you to actually action against it. Because this bubbled up view of all of sales and marketing spend is not all that actionable when it comes to how to guide that organization and how to make recommendations or at least call out potential flags when it comes to sort of understanding what's under the hood of your income statement or balance sheet. I think the second piece that we think about a lot, and it is where Numeric started, is this complete picture of all stages of the process. You cannot improve what you are not measuring, and without some sort of checklist, it is too easy for tasks to fall through the cracks. And the more that you can embed that checklist, not just to sort of orchestrate the work, but be the place where the work gets done and where all of the supporting work papers, documentation, and context live, the easier it's going to be to onboard new team members and change your process because people are sort of living and breathing in the context of your closed workflow as it is today. I think on top of that, for each individual line, there needs to be clear understanding and mastery of what does it mean at your company to reconcile your credit card or to do your short-term, long-term lease liability or to post a commissions entry. What is the average life of a contract? How is that? How does that actually happen when it comes to posting the journal entries? Then, with that understanding of the individual tasks, you need to make sure that you are closing the books quickly enough to then bite off where the potential and capacity for automation actually exists. Uh, as I was describing before, I don't think that the ideal close is a destination. The ideal close is sort of a mindset and a mentality that because we understand our system so well, because we have generated the time and the space for our core teams to improve this over time, we are able to run at, innovation in the business as opposed to sort of being a roadblock for new things and preventing sort of new initiatives, new products, new ways of um, conducting yourself to ever sort of see the light of day because of the operational requirements and having the accounting catch up to those choices. From there, once you sort of have an understanding of the individual tasks and your capacity to automate them, you want to make sure that you are checking the work through a disciplined reconciliation workflow that sort of audits what is in your general ledger against external accounts and work papers. And for an accounting team, you are closest to all of the transactions within each account. Flex reporting is the easiest way to understand, have a perspective, and sort of manage up to the stakeholders who are consuming this reporting and actioning off of it. And sort of the staff accountant's view into what actually is making up this account. What are some of the choices? What's some of the tricky accounting geography that might be driving a flux is actually wildly important in terms of how to operationalize this data and make accounting and finance a true partner to the organization with a seat at the table into how it conducts business.
Superb, Sam. And I think a way that we've kind of translated these ideas is into the thing that we brought everyone here today for, right? Which is Numeric's month-end maturity model. And briefly, of course, because we're going to get into each of these stages and kind of the tools that we see teams using to advance from one stage into the next, provide just a brief overview of what we're looking at here and what this maturity model represents.
Yeah, absolutely. And I think we're going to start with the proactive close. It is why everybody is here, and it is sort of the most important destination for us to get to. I mean, what is the point of bringing a bunch of accounting professionals on and talking about the ad hoc close first? And I think that the three principles that we think about when it comes to the proactive close is to one, scope the problem. And this sort of can exist at multiple different altitudes, right? It can exist at the altitude of what is the individual task that we are trying to execute against, and how exactly are we going to accomplish it, given our current set of tools, system, and team. But it can also exist at sort of like the highest macro level, where the problem is we need to be much more disciplined with how we budget by office. And we need to make sure that the end result of our month end close is to have high conviction in the fidelity of transactions by geography in order to drive decision making around country level general managers or office level general managers and how they manage their respective P&L. The second piece is to sort of chunk out each workflow across your team and then over time. Because this third piece is to make sure that you are optimizing your task sequencing. And this can sort of manifest in two areas. As I think about Numeric, there is one workflow around sort of ramp transactions where you can use a credit card to pay for an invoice transaction, and it's very easy to sort of code that and book that immediately to expense as opposed to relating it back to the invoice. And just a switch as simple as doing your bill pay and your matching transactions first and then getting to credit card expense can really improve your close efficiency and improve confusion down the line. Another piece that I think about quite a bit is we're a startup. In many ways, when I think about Numeric and sort of the power and capacity it has to solve the problems, the really complex accounting problems of finance teams, like I am not our ICP. I am a one man team who does not have the same degree of technical sophistication. However, by sort of sequencing the way that I reconcile our credit cards and our bank accounts first, I can get cash flow reporting, burn reporting out to Parker, and we can action against it by like business day two, just by virtue of the fact that I know what is required for us to have a close enough look at that account and immediately begin actioning off of decisions, even if the final reporting might not be prepared until business day 4 or 5.
Sam, I think kind of a through line from what you were describing earlier to now is really like how do finance teams kind of understand that they are building systems in service to a business. They are not just completing tasks as a part of a close. You were talking just a second ago about this example with Ramp and kind of how that task sequencing matters because it is not just doing the task, but it is in fact a reflection of earlier strategic thinking about business outcomes. There were kind of two examples that you've prepared here, and maybe you can talk about like the difference between assessing something as just a task, the spear point of a task, versus kind of thinking of the meta and systems behind said task.
Yeah, absolutely. And I think there's two dimensions there. I think, the task might be we need to book commissions and we need to book an adjustment and a release for deferred commissions and accrued commissions. That is a technical accounting workflow that requires some amount of know-how. And I do not want to pretend like it is simple to accomplish, but to me, that is sort of the last mile of what we are really talking about. And what we are really talking about is this marriage of two things. The first is what is the underlying business logic that substantiates the journal entry that you might write in order to book commissions? What systems do those live in? What data fields sort of underpin that? And is it very easy for us to sort of pull that data in order to generate the commission entry, and then also use that data in order to reconcile the entry in sort of the reconciliation phase part of the close. That sort of like end to end logic of what is the data, where does it live, is it easy to access, can we do it in a programmatic way, can we do it in a repeatable way, and is it possible for us to sort of automate the end-to-end workflow, is sort of one side of the equation. The other side of the equation is sort of like the strategic imperative and business logic. Does it make sense for us to be booking commissions against this data field? Is that an accurate incentive alignment between the account executive who's booking the contract and your business? I think that because accounting has historically been such a time consuming, detail oriented process where just getting the data accurate is 90% of the job, very little bandwidth can be spent on sort of like the upstream strategic question of is our commission structure even a good alignment of incentives between your go-to-market team and your business? And it's exciting for me to sort of have the time and space to do both, not just to sort of design a system that allows me to programmatically prepare what the entries will be for commissions, but also to sort of have a conversation with our sales leader of whether this system is actually working, and whether there is sort of a more elegant way for us to make sure that we're driving the right behavior from our sales reps to align with the outcomes of the business.
Now, Sam, what about even the principle of like task order, right? How that is, it might seem like tasks just occur and you should do them, but in fact, really dialing in that sequencing is evidence of that same systems thinking.
Absolutely. And I think this is sort of like the most emblematic example of sort of like I understand really deeply how Ramp, our expense management tool, works, and sort of the different ways that you can pay and the different ways that transactions can match to other objects, and sort of finance operations transactions within the system. And I know that I am not as dialed as I might otherwise be when it comes to our AP at numeric.io workflow, where we generate these outstanding transactions. And for some of those invoices, you are able to book the expense using your credit card. And for 1.5% back, I am trying to book as much expense through our ramp card as we possibly can. Um, I also know that within Ramp, uh, it is those transactions, even though they are ostensibly associated with an invoice, can be booked straight to expense and sort of ignore the invoice object that might be sitting in another application within the app. And to make sure that I am at least checking to see if any outstanding invoices have had processed credit card transactions. I am merely ordering the tasks to make sure that I am doing bill pay before I do credit card transaction coding. And I have harkening back to our discussion of sort of a continuous close principle. I have 45 minutes that is great podcast or music listening time on Friday afternoon to sort of rip through that week's bill pay and credit card transaction obligation. And a lot of that time is spent sort of um, less on the manual button pressing and way more on sort of the rule creation to make sure that I am getting automated over time.
Okay, Sam, I think from what you're describing, it sounds like, in this last slide, you talked about knowing ramp deeply, right? And it seems that you would say there's a systems thinking element and there's naturally a task execution, but kind of there's a marriage in between that really focuses, in fact, on like understanding your tech stack deeply. And I'd love to hear you talk a bit more about that, right? Like how is it so that understanding the tools you use, in your case, talking about Ramp and other tools as well, how does that really manifest as like, as written here, a catalyst of the close?
Yeah, I think that so much of what I spend time on is less the journal entry creation and more the exception handling and way more of when data looks strange or when data is not showing up in our general ledger. It is sort of going to the root of what is happening, and making sure that I am reconciling those edge cases. And I think because I have a knowledge of how journal entries are written into Zero, which is the general ledger that Numeric uses, or how Zero deals with foreign currency and how that is different from how our expense management system uses foreign currency, and how any bill that is billed in pounds or euros or whichever currency, but then paid in dollars, are never going to entirely agree, just given the way that those two systems handle FX adjustments. It allows me to shortcut a lot of the sort of tricky reconciliation challenges, and get to the heart of sort of what is new and novel about this issue, in order to make sure that our books are getting closed in an accurate and timely manner.
Yeah, do you want to speak kind of here to like, all right, if I'm a controller or CFO, there are things, maybe you can explain some of what's on this slide here.
Yeah, for sure. So everyone has the context of the business in terms of sort of what the expense priorities, what the revenue priorities, what um, the operating priorities of each of the departments are. And if that knowledge doesn't exist, then again, I think that that is a question of cross-functional partnership, and sort of making sure that there is a seat at the table for that knowledge to sort of permeate through how the organization operates. Then, at sort of again the spear tip, the last mile, there is the task execution. Each of these steps needs to happen in order to close your books in a timely and accurate manner. The way that fintech has developed is this sort of um, sprawling universe of point solutions and platforms that all orbit around your ERP. And so much of the possibility and opportunity of a close is making sure that the way that those systems are writing, reading, and interacting with each other is an accurate reflection of the business context that you need to make decisions, is sort of complete and accurate from an integration perspective, that a lot of the upstream transaction tagging that you might need to make decisions is happening programmatically and before it's written into your general ledger. And then, sort of downstream, it makes it much easier to prepare the specific journal entries that might be required to sort of translate business context through the place where the data actually lives down into sort of the spear tip of the journal entries getting written each month.
A question I have for you, Sam, is how do you think sitting as a head of finance at a SaaS vendor, being, highly involved in seeing what goes into producing a financial tech product, inform both your own learnings and understandings of kind of building a tech stack or investigating tools?
I think that I think that what we always underestimate, and we really pride ourselves on meeting businesses where they are. Like, the reality of businesses is so much more complicated than sort of the necessary idea. I think my favorite example of this is invoice cash matching. Just at Numeric, just in terms of the ways that our vendors pay us, we are trying to solve this like really simple abstraction. Numeric charges customers for our product, and then our customers pay us. And we need to match the payments to the invoices. And like, that is such a simple concept, but the reality is so much more complicated, where the way that we can get paid is ACH. We have gotten paid in a wire transfer with a fee. We can get paid via accounts receivable platform like a Zip or a Coupa. We can get paid in batch by a company like Stripe. There are companies that still pay us via physical check. So the specific data element that is matching back to that invoice is going to look a little bit different, or there is going to be some foreign currency adjustment or fee adjustment that sort of knocks off some of the sort of deterministic matching that might otherwise exist. And as I have sort of gotten so much deeper into what is required to run Numeric's close effectively, and then translate that into software that allows many people to run effective closes, it is always staying humble in the face that, like, the specifics of people's business are really complicated, and really building something that automates something from end to end, or is even lower bar, genuinely useful to how people close, is actually quite a high bar. And it requires a level of intellectual humility that, like, your demoable widget is not actually moving the needle in terms of how your customers are getting value from a fintech product.
That totally makes sense. It seems that building a fintech product requires also this, there's systems thinking at both levels, right? There's how do I understand the business systems that my customers are contending with to better enable outcomes for them. Um, we spent a lot of time talking about the proactive close, right? And I think that the audience probably has it dialed in now, right? Which is they understand this need to really scope the problem, understand what are their closes trying to accomplish, right? What are the workflows and what are the questions behind every task? Chunking out that template work you talked about earlier, um, as a means of understanding what work can come prior to the close process, right? And then optimizing task sequencing as also a reflection of the strategic, systematic thinking that must go into the close before any task is completed. And so quickly here, if that represents proactive closing, then what represents the next stick rung down the ladder, the automated close?
So I think that the key distinction between a proactive close and the automated close, you'll see that in two slides, is this idea that the close is not a destination. The ideal close is not a destination, but the ideal close is sort of a system and set of principles that allow you to sort of foresee the way that the business is changing and then sort of manifest that through the sort of people, process, and technology you need to use in order to close the books. In my view, the automated close is very much a sort of like snapshot moment in time. It is given how we operate right now, we do a pretty good job of like keeping people out of the weeds of myopically pressing buttons in order to get things done. But there isn't that sort of anticipation, there isn't that level of business partnership that allows you to sort of anticipate business change and have the flexibility to quickly iterate and improve upon a new system or a new way of doing things that might be a requirement for how the business wants to operate moving forward, or at least experiment moving forward.
Sam, what might be in your toolkit if you're or what might you suggest a accounting team add to their toolkit to help enable that motion or that movement from an automated close to a proactive close?
For sure. I think for us, the product that I am extremely fortunate to have. I am one person sort of covering every account in our income statement is our AI Flux Writer. So we have the benefit of transaction line level detail that is powering our reporting product and flowing through each of the accounts in our reporting suite, and it allows me to sort of get a it allows me to get sort of a first draft of what the period over period flux explanation might be, and really zero in on sort of like these are the vendors that I need more context on. I am not sure why we are spending money on this, or wow, that is really a large period over period increase that I did not catch, that our um, uh, own internal process did not catch, and I need more context on sort of making that a possibility for ourselves. And it really is this tool to one internalize and understand what is going on in the fullness of our income statement and use that as the jumping off point to sort of manage change and understand context from the rest of the business.
Sam, correct me if I'm wrong here, but it feels like being able to best utilize the Flux Writer is really dependent on having your data in shape. And that's something that is true perhaps for automated teams, but maybe is not true for kind of the next stage down the ladder, which is like being a documented team. And so perhaps you can talk a bit about like what differentiates now someone who has, ample documentation, but hasn't gotten the data in shape in order to enable some of that automation work.
Yeah, I think that this sort of boils down to you have line of sight into everything that needs to get done, but you do not yet have these sort of tool sophistication, knowledge, sort of systematic thinking in order to sort of chunk out and automate those processes over time. And that can sort of exist upstream when it comes to sort of core cash matching or accounting workflows. And it can also exist downstream where you sort of have your reporting packet and realize that it is not it does not require the level of detail possible in order to make sure that you can action off of it with sort of your business partners across your company. So as I think about sort of the tool in my toolkit that allows me to do that, it is very much our transaction monitors process. So for every transaction line that hits our account, there is a sort of programmatic search functionality for things that I end up screwing up every close. Maybe I miscat or forget to categorize a department or a geography. Maybe I am miscategorizing something as capitalizable as opposed to being an in period expense. There are probably a dozen of these that are sort of always on, running in the background, and flagging transactions that are worth a second look at. And it sort of serves as my QA team when I think about sort of the upstream uh, uh, coding and sort of transaction line writing specification for the other parts of my system, whether that's in my AP and expense system, whether that's in my AR system, whether that's in my payroll system.
Yeah, I think often we think about these internally as like having some parallels, especially to tools like the Save Search feature in NetSuite, right? Which you're able to kind of query across your data and set up these flags. But fortunately, because you're able to have the transaction line sync from your ERP into Numeric, you're able to set these up, far simply or sorry, much more simply than is done in NetSuite. I'm curious, Sam, do you have a monitor that you rely on? Especially that, or that you're like, oh, this is one of my favorite things. I'm so glad it flags these things for me.
The monitor that I use every single period. So the way in our income statement, the way that we have named this account, I think it's 1250 and 6040. 6040 is our office expense straight to expense account. It's a cash impacts cash. At I think 1210 is our capitalizable office equipment account. It is sort of the internal business logic that we use is anything that is over $2,500 that conceivably could have an effective capitalizable life. We would capitalize. So things like the phone booths that we bought for the New York office, or particularly powerful engineering laptops, fall into this capitalizable category. The issue that we have, and I fully admit that this is a simple fix, but I have not prioritized the fix, is that the names of those two accounts in Ramp are like basically identical, other than the greater than $2,500 sign or less than $2,500 sign. So as I am ripping through transaction coding in our expense management system, people screw that up all the time. I do not catch those issues. And inevitably, I am capitalizing, like a $27 coffee order from Amazon, and the transaction monitor is picking it up each month so that I don't wonder why my balance sheet is out of balance and my expense is not reconciling.
That makes perfect sense. Yeah, really establishing great data quality by catching errors in advance. I'd like to move now to a stage I don't think anyone in our audience is in, but there are people out there, that might be operating kind of with an ad hoc model. And I'd love to know, how might ad hoc closers think about progressing up the maturity curve?
For me, I don't know. I think that I consistently underestimate just how important and powerful the meat and potatoes of having a checklist is. And it is just impossible to understand sort of how much you are flying blind, how much you feel like you are sort of you're perpetually missing something and not doing a core part of your job. You're not able to proactively provide line of sight into when you might be done, or whether sort of you are able to look at cash, much less your income statement, without a closed checklist. And I think that, this is sort of at the most base level of the hierarchy of needs for an accountant. But I think that checklists are maybe sort of a simple concept, but the more power that you can sort of push into them, the more that they can really drive a lot of the sort of auditability, repeatability, and scalability of your close process is in many ways underrated in the market. And it is something that we sort of pride ourselves on having something that we are lucky to have customers consider best in class.
Now do
The
tell.
other, yeah,
Oh, go ahead. Yeah.
the other piece of the puzzle, and it's something that I am so excited about, is our cash matching tool. It is this. It combines two things. One, it sort of impacts this core need that we have, which is I spend a lot of my time stressing about whether we are matching transactions correctly and whether the sort of downstream transaction coding is getting pulled from the event metadata of all of our finance operations tech stack. Um, and what it also combines this sort of very innovative way to use AI to make the experience of using and driving the product that much better. The way that our engineering team has approached this is you're able to talk to the cash matching tool in plain English. It then sort of pulls in Boolean logic to sort of reflect the rule that you want to drive the matching engine. Um, maybe it's must include this invoice number or uninvoice number in the description. If yes, and amount within $100, then like suggest that match. Um, and it allows you to sort of quickly and easily iterate through as many rules as you need to get your automatic matching up from, uh, at present, prior to me hopping on the product, it was like around 40 to 50% with the tool that we had. Now the automatic match suggestions are upwards of 95%. And I am able to sort of specify which of the rules that are powering the match I am okay with automatically matching, and then which of the rules I want a sort of second set of eyes on as the reviewer. It is really sort of this incredible mix of the flexibility of plain English combined with sort of like the specificity, auditability, and determinism that is required for really strong accounting workflows. And it is definitely the product that is both new and I am extremely excited about, just in terms of how it, I mean, at least for me, has impacted my workflow.
Amazing. Well, we've made our way through the maturity curve, and I think we're going to start wrapping up here. People want to know, what is the end outcome of any period in close?
For us, I can talk about the tasks and then I can talk about the outcomes. For us, our checklist ends with reporting and an investor letter that I draft for our CEO to send out to our limited partners. And it really is this sort of sum total of here is the context of the business. And by virtue of me having gone through our month end close, I am now steeped in the details of the business. And I think I am an individual, but that is sort of a good paradigm for uh, how I think really high functioning teams think about their responsibility and the value that they can drive as a finance and accounting team. And to me, the end outcome of the period close is not just timely and accurate financials. It is a set of individuals and a team that has sort of the most context on the financial performance of the business and a deserving partner to the folks who are building, selling, and talking to customers to help inform how to get better over time.
Amazing. Lastly, here, you talk about how gap compliant closes are closed loop and deterministic. what does that imply for teams, or what does that imply for like increasing optimizations, increasing efficiencies within closes?
It is internally, we really avoid the term AI agent because it lacks specificity. It sort of implies a black box set of outcomes. And again, in sort of understanding that the real world is far, far messier than whatever your demo is, it is understanding that for you to have a repeatable close process that uses automation in a way that can sort of stand up to your big four auditor saying, yes, this is a totally acceptable population and way to execute this. That means that non-deterministic workflows are just not going to fly. And it is having sort of insight not just into sort of what journal entries were written, but harkening back to this sort of deep, sophisticated understanding of how the individual solutions in your technology stack read, write, and sync together in order to sort of power the automation that happens through financial operations, accounting, and all the way out to FP&A.
With that said, Sam Isaac, I appreciate you. We'd love to open it up now to any questions that folks might have in the audience. I know we don't have a ton of time left, but yeah, I think if there's any questions folks might have about the maturity model itself, more about how we operate our close at Numeric, we'd be happy to field any questions. But Sam, thanks for walking through all of that.
For sure. Happy to.
So we'll see here if there are any. Oh, let's see. Oh, here we go. Um, all right.
Does does AI FlexWriter integrate with Zero? So unfortunately, it doesn't. There is a sort of workaround that our engineers have done in order to greenlight that for Numeric, but that is not something that is available for our customers. Our AI FlexWriter integrates with customers who are on NetSuite.
All right. Well, hey, unless folks have any other questions, Sam, again, thanks for hopping on today, chatting through kind of what makes best in class closes, and we look forward to having you on again.
Nigel, thank you so much. And for those in the audience, please don't hesitate to reach out to me. I really appreciate you hearing me drone on, and I will look forward to the next time.
All right, everyone, take care.